Hello, everyone. Bill Wilson, Senior Editor for Supermarket News, here with another episode of Supermarket News Off the Shelf. We have a special episode today. Today with me is Frans Muller, who is the CEO of Ahold Delhaize, and he is going to talk about that they just came out with Q2 financial results. So he's going to get into that and some other things. Frans, thanks so much for joining us today.
Yes, Bill, and thanks for having me. And nice to be able to catch up. And thanks for your interest in our company.
Absolutely. So you want to talk about some highlights from the Q2 results?
Yeah, we can do for sure. We can do so. And I also need a little bit of your briefing here to do the best possible job for your readers and for your audience. We just closed the second quarter here. We had a good, strong quarter for Ahold Delhaize, which is a company with more than 60% of sales in the US and 40% in Europe and Indonesia. A good 4.3% growth in our numbers, 3.6% in the US and a 6.3% in Europe on the growth. A strong e-commerce and online sales growth of 9.3%. So top line was pretty strong. But also profitability did a good job with 4.1% on the profitability. We talked with our markets about the quarter, but we also highlighted that we are dealing with the present difficult environment. As we know, there's quite some tensions in society. It's not always easy for households to run their budgets with the tensions around food inflation, energy inflation, interest inflation, and sometimes those effects are stronger in the European markets and in the US markets. But that's just how we deal with the present quarter and the present reality. In the US, we have 6 brands, all on the East Coast of the US, and number 1 and 2 positions in all the markets where we're operating. And you might know the brands like Hannaford and Food Lion and the Giant Company and Giant Food. And Stop and Shop and Fresh Direct. Those are the brands we have on the East Coast, and we're very happy with that business development there. A cornerstone of our sales is private label, and you can imagine with higher inflation that this is important to give customers a good choice of price entry products to manage their budgets. And with 4.5% inflation in the US, food inflation in June. But we have, for example, 11.7% in Europe, so very high elevated inflation, which is, of course, tough for households to deal with this and to feed your family. So we talked a lot of things about these kind of things in the quarter, Bill. The other thing what we talked about is that we are looking at the present performance, but we have a company with a long-term view. So we also talked about sustainability, and we have been awarded this week the MSCI, the Morgan Stanley Sustainability Index of AAA, which is a very high rating for our sector. We are also a very good leader in the Dow Jones Sustainability Index. And we got one of our brands, even B Corp, certified recently. So I just say this because for us, there are a few things important to manage the present, but also make sure that we're there for the future. We're already 155 years in business, and we'd love to keep in business for another 150 years. So this is a small introduction, but I'm open for any questions you might have, Bill.
So what has been the strategy for your company this year, as far as, as far as the customer and the customer experience?
Yeah. So we are a company which is a company with an omni-channel strategy by definition. So the combination of stores and online. And we think that proposition will give customers a better customer value proposition itself, but also creates a bigger share of wallet of a customer when they know our brands, know our private label, they know our freshness and our products. That is for us an important thing. The other thing is that we would like to make sure that we invest in our brands in a very strong way. So this year we will invest 2.5 billion euros in our total company to make sure that our brands stay contemporary, that we do the right thing on digital and technology and in data. That's a strong anchor stone. And an important strategy for our company is, and that's where we're rather unique, is that we carry 19 brands in our total portfolio. And all those brands have number 1 or 2 positions in the markets. The 6 brands I mentioned to you in the US are no exception there. And the second thing is that we we love those brands which are close to the communities, which are ingrained with the communities, local leadership, local ownership, accountability. And we have brands which are for decades already very close to the communities. We celebrated this year 100 years of the giant company in Pennsylvania, and we're so proud about that. And that has been earned over the years. So local is important for us. Omnichannel is important. Digitized and digital engaged, well invested, strong private labels, strong fresh, and very close to the communities as a sort of summary.
So how are you looking, maybe if we can turn to the US business here for the rest of 2023, what's it look like for you?
Yeah, that's not an easy question. I understand the question. It's not an easy question because its visibility is not great, right? I mean, where will inflation go? We think that inflation will further moderate from the 4.5% in June, will further moderate. That's one thing. We see also that the government funding in SNAP and emergency support is going down too, which is not a great news for a lot of families. But we also see that across the US, in most of our brands, we have the sales numbers of comparable 4% in the US, but we still carry in a lot of brands negative volumes, and that is not healthy for on the long run. So what we see now in the partnership with our vendors, that we also see that trade funds are coming back. They're not back at pre-COVID levels, but trade funds are coming back. Promotions are again coming back into the game to boost also volume. So what we hope for and what we expect is that with the collaboration with our brands and our vendors, that we get volumes back positive by the end of the year, that we are able to deal with inflation, less SNAP, and these kind of things to make sure that household budgets are good, so that people can afford healthy, affordable, and sustainable food, which is our main interest there. And the other thing is what we worked very hard on in the last 2 years, and which we're going to benefit from this in this quarter and in the second half of the year, that we have migrated our supply chain to a self-distributing supply chain with 25 DCs along the East Coast. And that will be a big help for shelf availability, freshness, but also for working capital. So those are also elements we have on our docket, on our bucket list to bring in the second half.
So let's talk about inflation, and what have you done to really help the consumer get through this difficult time?
Yeah, that's a question which, of course, is concerning all of us. To make sure that families are able to buy affordable, healthy, and sustainable food is one of our major tasks. And we serve in a total company 16 million customers, roughly 40 million customers every week in the US. So this is a big question we have to solve here. So what did we do? We first of all worked very hard on our own cost situation. So we call it Save for Our Customer programs, to find the funding to invest and to reinvest in price. We launched more and more private label brands so that our private label share went up, and those private labels have a very good price value composition. We looked at fresh formats and fresh assortments, and also convenience foods, to make sure that what is easy for customers to prepare a healthy meal. And we saw that coming out of COVID as a big spike as the restaurants were closed. We learned a lot out of this. So I think we improved our convenience assortments a lot. So we make those available for even better prices. So those are a number of things. And we all connect people to loyalty systems. And loyalty systems, I think 75% of our total sales in the US is going through the loyalty systems. So people get benefits from individual offers and couponing and these kind of things, which are completely tailored to their buying behavior and to their needs. So those are a number of things, what we try to do to make it as affordable as possible, and that people also with a lower income can still get a decent meal for their families on the table.
So Metro Grocery in Canada, the Toronto area, there's workers on strike there. How are you with your labor issues, your labor challenges? What are the challenges out there, and how are you guys fulfilling those challenges?
Yeah, we have a general policy as a company to make sure that we have labor packages and remuneration and compensation at market levels. In a number of brands, we are unionized in the US, we're organized in the US, and I think we are paying very much according to market levels. Apart from that, I'm not only talking about minimum wages, but also I'm talking about the total package for our associates. We are, I think, also a very strong supporter of benefits, and we have a very strong arrangement for pensions and the 401ks. So these kind of things are very important to us, because in the end, the folks working with us, the 200,000 people, more than 200,000 people in the US, are of course an important capital for our success. So if you would measure us, I think we have very strong compensation packages, most of the times above market average wages, which are way beyond the minimum wages. And I think we see also a very strong loyalty amongst our people, which we measure with our associate engagement surveys and these kind of things. And so far, I think we see also that it's easy for us. Easy is the wrong word. It's very doable for us to attract the right people and the right talent for our company. Says something about compensation, but also says something about culture in our company, the values we have in our company, and people think, hey, this is a good company to work for.
Let's talk about your private label. Obviously, it's been, sales there have been going up during this time of inflation. What about post-inflation? Do you think that you'll be able to hold some of this gain with your private label brand beyond this time of inflation?
Yeah, we have. I think that is true. If you look at the European segment, then we have, for example, in the Benelux, Belgium and Holland, we have a private label participation sales share of more than 50%. It's a very high, typical European phenomenon. You see the same type of thing in the UK. If you look at the US, we have a 30% sales share private label, but we have also brands with 35% sales share, for example, like Hannaford in Maine and Vermont. And we think there's an opportunity to grow that sales share more. People are looking for brands and products which are rightly formulated, which have, for example, a very clear organic signature, which are having a very favorable price-value relationship, or which are in specific space for gluten-free or freshness and these kind of things. We think there's an opportunity here. And that's why we have a strong private label department operating from Carlisle in Pennsylvania to do exactly that. So yes, we see a growth in our private label, but we also think that there is more opportunity here to grow that share. In the end, customers decide, right? So we have to do the right job here on price and value and proposition reformulation. But I think systems like the Guiding Stars, which is this nutritional navigation system, help us also, and we follow those systems very carefully to give people more information about our brands and to force ourselves to reformulate to healthier and more sustainable products.
So let's talk about sustainability. And I know in the US, one of the things that Ahold Delhaize is doing here is managing food waste. Do you want to talk about that crusade there as far as bringing that food waste down? I know there's some pretty sizable goals there for food waste. Did you want to talk about that?
Yeah, we can talk about sustainability. It's an important agenda for us in general. So we have a number of targets out there, which we specify for the group, but we also break it down by segments for the US and for Europe on food waste, but also on plastics and also on climate, scope 1, 2, and 3. But also on DE&I. We have a number of these kind of things defined for ourselves, and we find it very important that our brands in the US at least go to zero landfill products, and that we find good destinations for the products we cannot sell. So strong relationship with our food banks, very high level of donations to food banks of meals. And if we can't bring it to the food banks for whatever reason, then at least it should have a better destination than landfill. And that's why, for example, an Hannaford brand is since 2021 also has no landfill donations from food we can't sell. We have better destinations for that. So food waste, of course, it's so important now in the present times where there is there are communities where there's not enough food, where people don't have their 1, 2, or 3 meals per day. So then just imagine that you are not having a better destination for food you can't sell. It's an ethical, it's a moral obligation from our side to make sure that food finds a better way. That's why we have very strong relationship with food donation banks and organizations in the US, in the various states where we operate. And I think we have a great track record there. And our folks are very, very enthusiastic about this. And we report on this. And if you would like to get a few numbers specifically, then I can make sure that you get the numbers for the US specifically on food waste.
Yeah. Okay, great. Do you have any plans for store expansion or store maintenance in the US at all, or?
Yeah, we invest every year roughly $1.5 billion in our store network. That is for maintenance, that is for remodeling, that is for new stores, that is for digital technology and DCs. We invested quite heavily in our total network of supply chain when we started to let's say take the supply chain back to us to have our self-distribution. And we just took on board again our Chester DC as one of the last bits and pieces to be 100% self-distributing in the US. We remodel a lot of our stores to make sure that our stores look contemporary. We have strong remodeling programs for Stop and Shop or for Food Lion on a regular basis for Hannaford. We invest also in our DCs, which we already owned. We invest in technology, in automation. So I think we are a very active investor. And for example, we just took the new batch of 76 stores in the Wilmington Greenville area, where we remodeled all our Food Lion stores. And those stores do extremely well with double-digit growth. But we also invest heavily in our Stop and Shops network, where we make the stores even better. And if it's in the New York area or if it's in the rest of the Stop and Shop network, we remodel roughly 60 stores a year for Stop and Shop. And those are quite big stores, so those are quite big investment and commitments. But so far, the results are very satisfactory.
Well, Frans, thank you so much I appreciate your time. I know you're a busy man. Did you anything else you wanted to add that I didn't ask about or I might have missed that you want to make sure to get across?
No, we talked a little bit about sustainability, and I appreciate that. In the end, this will be also a drive for customers to make their decisions in some of the markets faster than in others. We talked about inflation. We talked also how we see our function in society to make sure that communities staying healthy and that we bring good and sustainable and affordable food to everybody who we serve. We are very proud about servicing the communities in the US. We have more than 2,000 stores or 2,000 neighborhoods, 2,000 communities, and we're very much linked to them. And I'm very proud about our people in the US, which under not easy circumstances, after 2 years of COVID, another year of a lot of social and economic tensions, that they do such a great job to serve our customer base in this way. So proud here, reporting back to you, Bill, from Amsterdam. Proud about our people, strong results for the quarter, and quite some interesting second half year to go. But I'm pretty confident that we will round this off in line with the guidance we gave to the market, and we upped our free cash flow guidance, as you have seen. And I think we also have a pretty decent dividend too.
Frans Muller, CEO of Ahold Delhaize, thank you so much for joining us today.
Thank you, Bill.